Are you planning to buy a home in Canada? You may think getting approved is as simple as qualifying for the interest rate your lender offers. But there's one important step many buyers don't know about: the mortgage stress test. Even if your mortgage rate is low, your lender wants to know one thing. Could you still afford your home if interest rates went up? Let's break it down in simple terms. A mortgage stress test is a financial check that lenders use to make sure borrowers can handle higher mortgage payments in the future. Instead of qualifying you using your actual mortgage rate, the lender qualifies you using a higher rate. The goal is simple: to make sure you'll still be able to afford your mortgage if interest rates increase. It protects both you and the lender from future financial stress. Let's look at an example. Imagine you are buying a home and your lender offers you a mortgage interest rate of 4.5%. You might think your application will be assessed using that rate. But that's not how it works. Instead, the lender checks whether you could still afford the mortgage if the interest rate were around 6.5% or whatever the current qualifying rate requires. That doesn't mean you'll actually pay 6.5%. If you are approved, your mortgage payment is still based on your actual contract rate. The higher rate is simply used to test whether your finances could handle rising interest rates in the future. Think of it like a safety drill. You hope you'll never need it, but it's better to be prepared. Interest rates can change over time. If your payments suddenly become more expensive, the stress test helps make sure you are financially prepared. That's why lenders use it, to reduce the risk of homeowners falling behind on their mortgage payments. Passing the stress test gives everyone more confidence that your mortgage will remain affordable even if market conditions change. Don't worry. Failing the stress test doesn't necessarily mean you can't buy a home. It simply means you may need to strengthen your application. You could consider buying a lower-priced home, saving a larger down payment, paying off some existing debt, or increasing your household income before applying again. Small improvements today can make a big difference. Before applying for a mortgage, take time to review your budget, improve your credit score, reduce unnecessary debt, and save as much as you can for your down payment. Most importantly, work with an experienced mortgage broker who can help you understand your options and guide you through the entire process. The mortgage stress test isn't meant to stop you from buying a home. It's designed to help ensure your home remains affordable, not just today, but for years to come. If you are wondering how much you could qualify for or need help understanding the mortgage process, I'd be happy to help. I'm Bony Nandwana, your mortgage bro. Thanks for watching, and I'll see you in the next video.